All right. Assalamualaikum and good morning, everyone. So for today, we're going to discuss topic number 8, short-term financing. Okay, so we've discussed for the past 1 or 2 weeks. I think for the last meeting about the management of working capital. Okay, whereby we have to manage our current assets, okay, to ensure that it's available, and we have to make it balanced so that we don't have too much current assets at the same time, okay, to make it sufficient. But what if unfortunately we have some deficit, okay, with regards to our current assets. So one of the solution would be, all right, we have to borrow money short-term basis. So that's why for today we are going to discuss the options, okay, the options available for short-term financing, and how to calculate the actual costs. Okay, so bear with me. I'm going to share with you. This is a slide. So as I said, the first part we are going to discuss the types of short-term financing available, and secondly, how to calculate the actual costs, okay, of each types of financing available. Okay, from second we have a lot actually options, okay, but we are just focused on 4 different types of financing available. All right, so let's go to the definition. All right, so short-term funds are funds that a firm has to repay within a year, as I said, and this usually we use the short-term financing to cover the short-term shortages of current assets. Okay, so sometimes it used to meet seasonal, sometimes not all the time the company may require short-term financing. So usually due to the seasonal or sometimes temporary fluctuations of companies funds. Okay, so the pros and cons to use short-term financing, obviously in terms of the flexibility, okay, because it matures usually within a year. Okay, when we talk about short-term financing, it will last less than 1 year. Okay, less than 1 year, so 3 months, 6 months, 9 months. Okay, with a maximum of 12 months. Okay, the cost sometimes cheaper. Okay, the cost in terms of the interest or profit charges from the financier, usually cheaper. And in terms of risk, okay, the risk also can be considered lower as compared to long-term financing, because first of all, the value might not be as huge as long-term financing, and due to the cheaper costs, obviously the payments usually not that huge as well. So therefore, the riskiness is not that huge as compared to long-term financing. Okay, so here, as you can see, we have a few options. And again, you've heard these terms before: the spontaneous and the non-spontaneous financing, okay, or the sources of funding. Okay, in the topic of pro forma, if you recall, one of the steps to raise the funds, we have the internal and the external funding. Okay, remember that? Yeah, we have EFN, additional funds needed. Okay, remember on the right hand side, which is on the liabilities and equity side, there are some items we increase and some items we keep it constant. Okay, the ones we increase are actually part of this spontaneous. Okay, spontaneous funding. Okay, so we have, for example, here accrued wages, accrued taxes. So this is all accruals, if you remember. Okay, accruals. And we also have account payables and trade credit. So this is funding from our supplier. Okay, from our supplier. And for us today, under the internal financing, we just focus on this part, the trade credit. Okay, this would be one of the major source of financing. Okay, meaning we get the funding from the supplier. What kind of funding? When we buy goods from our supplier, we get credit. We have the options to pay on deferred basis. Meaning kita boleh bayar delay lah, meaning 30 days, 60 days. You remember tak the terms yang kita guna for cash management? The credit terms, 210, net 30, for example. So this is a credit term from the trade credit in transaction. Okay, so meaning we have this option to pay later in 30 days time, for example. Okay, so this is a trade credit, and this is an option untuk credit ataupun short-term financing. Okay, that's spontaneous. For the non-spontaneous financing, this is from external. Remember, this is from external. And there are two types here. We have unsecured and secured. So what is the difference between the two? Secured here means with collateral. Okay, collateral apa? Cagaran. Okay, meaning if you want to borrow money from the external parties, we need to put security. We have to put some asset as a collateral. Okay, kalau unsecured here means without collateral. Okay, so that's the difference between the two lah. But for our case here, short-term basis, usually it will be here under unsecured. Okay, the ones without the collateral. Okay, and we have a few options under the unsecured external financing. For example, we can use the term credit. We have what else? Commercial paper, for example. And we have RCA, Revolving Credit Agreements. Okay, so these are the three that we're going to discuss later. The short-term credit, sometimes just we call them as short-term bank financing, the commercial paper, and also the Revolving Credit Agreement. Okay. Okay, so financing in terms of internal financing, this source of financing arise from the normal transactions or the operation of the business. Okay, as I said tadi, the commonly used would be under the trade credit. Okay, in which the transaction happened when the company bought goods from their suppliers. Okay, and they receive credit from the suppliers. Okay, and how to calculate? Okay, this is our first formula for today. And for internal financing, for trade credit, by the way, okay, this is the formula to be used. Okay, but for external financing later, you're gonna see that we have a slightly different formula. Okay, and for that section of financing, the external financing, the formula for the other three will look somewhat similar. Okay, but not for this internal financing. So the internal financing will be something different lah in terms of the formula. So meaning we have 4 products I cakap tadi. We have 4 products, 1 internal, 3 external. For the internal financing, which is this one, we'll have formula like this, but for the other 3, we have different formula. Okay, so for internal financing, okay, the formula will be the discount. Okay, the discount rates. Okay, this we are talking about the rate here. What will be the discount rates? Divide by, okay, we divide with 100% minus discounts. Okay, and then we multiply with 360. So this 360 will be fixed, fixed. And we divide with credit period minus discount period. Okay, so remember last time we have these credit terms. Okay, 210 net 30, for example. Okay, so again, if you can recall, these two refers to the discounts. 2% discount. Okay, and this 10 days refers to discount period. Okay, discount period, this one. Okay, discount period. Or else you have to pay in full net within 30 days. So this is our credit period. Okay, so I recap. 2% discounts if you pay within 10 days, or else you have to pay in full within 30 days. Okay, so no more than 30 days, the maximum will be 30 days. So what is the formula will tell us? This is actually the cost of not utilizing the cash discount. So meaning if we don't take these discounts, how much actually it will cost us. So meaning example like this. You have you bought 10,000 ringgit. Okay, 10,000 ringgit worth of goods from your suppliers. Okay, you beli barang from suppliers, and the worth of the goods that you bought to 10,000 ringgit, right? And your supplier give you these credit terms. Okay, so you have two options: to pay within 10 days in order to get the 2% discount, or else you have to pay within 30 days. Right? Now, you have two options. Okay, whether to pay early in order to get discount, or else you have to pay in full within 30 days. Okay, and let's say after you bought this from your supplier, okay, you have one opportunity, maybe for example, but you need 10,000 ringgit also. Okay, for investment, katakanlah. Right? So now you have options. Whether to borrow from other sources, or you can use this 10,000 ringgit that you have. Okay, you beli barang from supplier 10,000 ringgit. Let's say you have the cash. So if you have the cash, one of the thing you can pay this early lah in order to get discount kan. But at the same time, you have requirement to do something else, new project, new investment, 10,000 ringgit as well. So meaning here, the 10,000 ringgit that you have, instead of you pay your credit here to your supplier, instead, okay, you use this 10,000 ringgit. Okay, meaning you don't utilize the discounts. So you wait until 30 days baru you bayar in full. Okay, and this 10,000 source ni is from internal. It's actually your own money. Okay, your own money. So you are just using these credit terms to delay the payments. Okay, there's a cost for that transactions. Okay, by foregoing, kita panggil dia foregoing the cash discount, not utilizing the cash discounts, it costs you certain percentage. Okay, so how to calculate? Using this formula lah. Okay, so we just need three things. Okay, the 2% discount, discount period, and also the credit period. Right? And between the two, if you can see here, credit minus discount, and so it's always the larger number ataupun the larger number of days minus the lower number of days. Okay, if you cannot recall which is which kan. So always the bigger number minus the lower number for this part. Anyway, we call them AOC ataupun sometimes we just call them EIR, effective interest rates for internal financing. Okay, so the formula is discounts. Okay, so our discount is 2%. Minus 100 minus discount, meaning 100% minus 2%. Okay, so this is the left-hand side part. Multiply with 360. So this is constant or fixed, 360. And we divide with credit minus discount. So we have here 30 minus 10. 10. So here, the actual cost is about 36.7%. Okay, so that is the cost, the annualized cost for 1 year. Even though we just borrow for one month here, tapi we have to annualize it. So cost for the annual will be around 36.7% by not utilizing the cash discount. So what does it mean? This is expensive. You bayangkan you borrow money from someone with this rate, 36.7%. Okay, so what does it mean? This is not a good option if the rate is 36.7%. It's so expensive. So what does it mean? If you have to borrow money from somewhere else, it is better to borrow money from somewhere else. Meaning the 10,000 that you have, you should actually pay or get the discount. Okay, pay early to the supplier, get a discount within the 10 days. So the requirement for the 10,000 for something else, so it's best for you to borrow from somewhere else, borrow from the bank, for example. Okay, because the rate might be cheaper than this one. Okay, if you use your own money and forgo the discounts, you are actually paying 36.7%. Okay, so that's internal financing or spontaneous, and that's why from internal point of view, the source of financing from internal usually would be considered expensive. Okay, it would be considered expensive. Okay, so something like that. So for example here, the one company purchased 1,000 ringgit, maybe 1,000 ringgit or 10,000 ringgit worth of merchandise, and they have these credit terms. Okay, and there are other options. If you borrow money from somewhere else, they charge you 7%. Okay, this is this situation. Okay, so the annualized rate will be 36.7%, just like what we calculated earlier. So if this company, Agosni, requires funding for something else, okay, this company should take the discount and borrow money from other sources which only charge them 7%. Okay, 7 versus 36.7, obviously 7% is cheaper, kan? So for short-term financing, we always go for the cheapest rates. Okay, we always go for the cheapest rate. So for this case, it is not the best option, 36.7%. Okay, so that's our first example from internal financing. Okay, specifically from trade credit. Okay, we just need credit term, yeah. We just need these credit terms. Okay, with these three items, then we can calculate our AOC. Okay, now we move on to the external sources. Okay, so as I said, for unsecured loans granted without any collateral, secured here with, okay, requirement with collateral. So we have a few here. The ones that we're going to discuss later will be notes payable, which is short-term bank loans. The revolving credit, as I said, the RCA, revolving credit agreement, and commercial paper. Okay, we have a lot, like I said, but only these three that we're going to discuss in terms of how it works and how to calculate the costs. Okay. So notes payable. Okay, notes payable. This one you always see in the statement of financial position as one of the current liabilities. Okay, as one of the current liabilities. It is a single payment loan, okay, obtained from the commercial bank. So meaning you as a company borrow money from the bank, and the bank will give you one single payment loan. Okay, just like a normal loan, I mean you apply from the bank, 10,000 ringgit. Bank made the assessment and then approve and disburse the 10,000 ringgit to you. Okay, one single payment. There's no recurring punya transactions. Okay, and this type of loan made when a borrower needs additional funds for short term. Okay, this is for short term basis. And this is one example of unsecured. And obviously the note will identify what will be the maturity date and also what will be the interest charges. Okay, next we have line of credit. Okay, line of credit is an agreement between commercial banks and business units. Okay, usually will given for a period of 1 year and it will be recurring. Recurring here means if you have let's say you apply line of credit is one of the simple example would be one of them, right? But it's not part of our calculation here. Is credit card, for example. Credit card. Okay, credit card. So credit card is one example of line of credit whereby you being given a credit line, line of credit lah. Okay, 10,000 ringgit as your limits, and you can spend that 10,000 ringgit. Tapi for credit card, they don't expire within 1 year lah. Tapi for line of credit, for example, before the expiry, you can use that amount. Okay, and every time you use your credit line, you have to repay back. Okay, usually after 1 month, you have to repay. Once you repay it, okay, the credit line will go back to the original values. Okay, and one part of line of credit is the revolving credit. So this is one example of a line of credit. Okay, the revolving credit. So the commercial bank guarantees the borrower that the specified amount will always be available, just like credit cards just now. Okay, however, for this revolving credit, it can be short term, 1 year, or it can be slightly longer terms. Okay, one of the features of revolving credit is the concept of commitment fees. Okay, concept of commitment fees. So what does it mean by commitment fees? If you have 10,000 ringgit, for example, revolving credit line, okay, you need to use that amount of money, 10,000 ringgit. Okay, but if let's say you've given 10,000 ringgit, but you only utilize 9,000 ringgit, so you meaning you're not using your 1,000 ringgit part of your line, okay, that 1,000 ringgit will be charged with commitment fees. Okay, so these commitment fees will be charged on the unused balance. Okay, I recap. If you've given 10,000 ringgit line, okay, but throughout the year you just spend 9,000 ringgit. Okay, so you have 1,000 ringgit unused. Okay, that 1,000 ringgit will be charged with commitment fees. Okay, so that's revolving credit. OD, overdraft, this is usually parts of your current account, whereby the bank will allow you, okay, to overdrawn your current account. So meaning kalau dalam current account you ada 10,000, again 10,000 ringgit, but you issue a check. Okay, you issue a check worth, let's say, 11,000. Your account ada 10,000 je, but you issue a check worth 11,000 to make payments. Okay, for example. So when the customer ataupun the person that receive your check tu go to the bank and want to bank in that check tadi, the bank will allow the 11,000 to pass, meaning with the 1,000 credit. Okay, that is overdraft. Okay, it designed to cover customer short-term constraint tadi. In the bank account, the 10,000 je, but they issue check with 11,000. So the 1,000 tu will be charged to you later. Okay, obviously you need to pay within as fast as possible actually, because the interest is calculated based on daily basis. Okay, and maximum will be 1 month, and it will be penalty if you don't pay within 1 month. Okay, so that's overdraft. It will allow you to overdrawn your account. And last one is commercial paper. Okay, commercial paper. Unlike the first four, I think here, from notes, notes, line of credit, revolving, overdraft. This is all from banks. Okay, but we have here another option, but this is not from the bank. Okay, meaning the funds not coming from the bank. This fund for commercial paper will come from investor. So meaning companies or individual who have money can purchase this commercial paper. So when they purchase this commercial paper, that will be the sources of fund from this transaction. So meaning, as a company that requires money, they can sell the commercial paper. Okay, so meaning here we have seller and buyer instead of borrower and lender kat sini. Okay, so this is a form of financing. Okay, unsecured promissory notes issued by companies with high credit ratings. Number one, high credit ratings, and number two, usually will only issued by large companies with good reputation. Okay, because if they don't have these two requirements, nobody will buy their commercial papers. Okay, because again, remember this is unsecured, so meaning tak ada cagaran. So as a buyer of commercial papers, will you buy simply from any companies? Obviously not. You're gonna buy from companies who is, well known, number one, stable financially, right? Baru kita have a trust to buy the commercial papers. So that's why only large companies with good reputations, good credit standing, be able to sell this commercial paper. Okay, so this is simply like similar like bond, but short-term basis, right? So the maturities range from 30 to 270 days. Again, this is less than 1 year, and this is just some information. Generally issued in multiples of 100,000 ringgit. Okay, now we go back to the calculation part. Okay, so the first 4 or 5 tadi just the introduction, the features of each source of financing. So now we go to the first one. Actually, we are talking about the notes payable ataupun the bank loans earlier. So here are some information regarding the cost of bank loans. Okay, we have 2 different rates ataupun 2 different interest rate here. We have the nominal interest rate and we have the effective interest rate. So what would be the difference? The nominal interest rate is the unadjusted one, unadjusted interest rate, and usually it will be the one stated on the offer letter. Okay, this is based on the one that the bank declare. Okay, you want to borrow from us, you're going to be charged 3% per annum. Okay, 3%. So that will be our nominal rates, nominal interest rates. Okay, but if you want to make comparison between multiple banks, katakanlah you apply to many banks and you want to compare, we cannot compare using nominal because every loans may have different terms and conditions. Okay, so therefore, in order to make comparison, the best way to do is to look at the effective interest rate. Okay, this is the actual cost of borrowing after taking into considerations the differential periods and also obviously in terms of the terms and conditions. Okay, because due to the terms and conditions, it can increase the actual cost. Okay, so nominal cost might not be relevant to us. So as I said, between the two, the best way is to calculate the effective annual interest rate. Okay, this is where I said tadi, we use the terms EIR, effective interest rate. And we're gonna calculate the EIR for all options that we have. Okay, this is the one that we're gonna calculate later, the effective interest rate. So for the bank loans, okay, we're gonna look at 2 things. Okay, 2 terms, okay, that usually associated with borrowings from the bank. Okay, the first one is the discounted loan. Okay, so what does it mean by discounted loan? Okay, this is not discount bila you beli barang tu, no. The discounted loan here refers to the interest, okay, interest that you have to pay in advance or you have to pay upfront. Okay, at the beginning of the loan. So meaning if you, again, I use 10,000 ringgit. Let's say you borrow 10,000 ringgit from the bank and the bank charge, let's say 10% interest. Okay, so 10% of that 10,000 ringgit you have to pay upfront. Okay, so let's say you become 10K at 10% for 1 year. Okay, so 10% of 10,000 ringgit is 1,000 kan. So that 1,000 ringgit interest you have to pay upfront. So meaning when you borrow money from the bank 10K, okay, 1K will be deducted because you have to pay the interest upfront. So meaning what's the balance? 9K. So this 9K je, you can utilize it. Okay, instead of you borrow 10K, tapi because of the interest is upfront, so the 1K will be deducted from your loan. Okay, So the amount that you can utilize is just 9,000 ringgit. And because of these terms, discounted loan, your interest rate is not the ones stated here. It's not 10% actually. It will be more. Okay, later I'll show you how what actually will be the effective interest rates. Okay, that's the term number one, the discounted loan. Okay, remember when you see the word discount interest or discounted loan, it means that the interest needs to be paid upfront ataupun in advance. Meaning we need to deduct this from our borrowings. That's number one. Number two, okay, the second term that usually associated with borrowings would be compensating balances, or sometimes in short we call them CB. Okay, compensating balances. So this is a portion ataupun an amount, okay, that the bank requires you to keep. Okay, you need to keep with the bank to compensate the charges in terms of the loans and services. Right. So what does it mean here? Usually they will ask you to keep either in savings or current account because they usually will ask you to keep in low interest or non-interest bearing. Kalau low interest tu savings, kalau non-interest ni usually current account. Okay, so either these two. This is normal, maknanya for the rest of your period of borrowings tu, you need to keep certain amount in the bank. Again, example kalau letak 10k tadi, you borrow 10,000 ringgit, okay, from the bank, and the bank said, okay, as a compensating balances, you need to keep 10% of your borrowings in the current account, okay, for 1 year as well, because you borrow for 1 year. Okay, for the whole 1 year, you need to keep 10% of your borrowings in the account. Money you cannot withdraw lah. So again, example here, if you borrow 10k, okay, so if the bank said 10% compensating balances, so 10% of 10k again is 1,000 ringgit. So that 1,000 ringgit needs to be kept in the bank account for 1 year as well. So maknanya again, kalau you borrow 10k, so 1k which is 10% needs to be kept in the bank accounts. So maknanya again you cannot utilize 10k sebab 1k needs to be kept in the bank account as a CB requirement. So again, you only left with 9k to utilize. Okay, so these are the two terms and conditions that can affect your borrowings. Instead of you receive solid 10k, you have to deduct. But imagine tu baru each one, but what if kalau the bank impose both, okay, discount interest with CB requirement. Okay, kalau you combine these two cases, okay, pinjam 10k with discount interest, and on top of that, the bank impose CB requirements. Okay, so discounted loan dah kena tolak 1k, so you left with 9k. Okay, and then on top of that, we have CB requirement 10% as well. So tolak another 1k. So the amount that you can use, amount that you can utilize, left with 8,000 ringgit only. Okay, so again, it will affect your effective interest rate. So now let's look from the ringgit point of view lah, ataupun using the real values, and we want to see what will be the implication to the interest rates. Okay, so here as you can see, we have two different interests. Okay, the one that I mentioned earlier, the terms and conditions, we have based on the discount basis, the discounted loan. Okay, but we have also interest based on the normal loan ataupun normal interest, okay, based on collect basis. Okay, so we want to see the difference between the two. What will be the implication? Okay, actually this is not only for collect. The ones that we're going to calculate, the EIR, remember this is effective interest rate. The formula will be based on this. Okay, this formula will be applicable when we want to calculate the bank loans, okay, short-term bank loans. This is based on interest payment. Okay, so for those yang tak tahu how to calculate interest, formula of interest be principal multiply with interest rates multiply with the term. Okay, how long it will mature. Okay, in our case, interest study, we know since this is short-term basis, so our term usually will be maximum of 1 year. Okay, 1 year. So principal here means amount you borrow. Okay, amount borrowed, multiply with the interest rates, multiply with the time. Okay, how long it will be your loan lah, how long. Okay, so the whole formula here is just to calculate this interest rate. The principal here refers to amount. For this, you use the word principal. Later on, you're going to see that we use the word proceed kat sini. Okay, so what does it mean by proceed? Proceed here refers to usable amount. Okay, remember, just like I said tadi, we have two terms kan? Discount loan dengan compensation balance. So both terms might reduce our principal. Okay, so that's why the proper name usually we're going to use the proceeds. Okay, and this proceed refers to the usable amount. So just like this example tadi, kalau dia have discounted loan, so the usable amount is 9,000 ringgit. But kalau both, it will be 8,000 ringgit, for example. So you minus discount loan and CB requirements. Okay, that's usable amount under the proceeds. Okay, and then we multiply with 12, refers to 12 months in a year. Some question we might use 360. Okay, either one can be used as long it must be consistent. And we divide with, again, the time, maturity in months. How long you gonna borrow it? So kalau kita guna 12, it will be in months lah. Kalau you guna 360, it's gonna be in days. Okay, depends. Dia dua-dua boleh guna. Okay, so kalau you borrow for 3 months, it will gonna be 12 divided by 3 lah. So kalau maximum 12 months, so 12 divided by 12 for 1 year. Then we can get our EIR. Okay, so you can see so it's the same thing, the same formula. Now we use the terms proceed kat sini. Okay, so for discount basis, okay, remember this is where the interest is paid in advance ataupun upfront. So therefore our proceeds will be reduced by this transaction. The loan amount we minus with the interest. Okay, meaning we have to calculate the interest as always, macam ni. And this amount of interest will be deducted in the net proceeds as part of your usable amounts. Contohnya macam ni lah. Mr. Lee is going to borrow 3,000 ringgit for 1 year. So this is the principal for 1 year at 12%. So this is our rate, 12% interest. And this 1 year is our time. Okay, so the T ni you boleh guna 12 sebab dia dalam bulan, or you can use 360 as in a year. Okay, up to you, but I usually guna ni lah. Okay, but again, for me, I think better if you look at the question. So kalau question guna hari, you use 360. Kalau question bagi you in months, you use months lah. Okay, so what will be the effective rates? Okay, this is your EIR. If the loan is based on collect and based on discount. So what's the difference again? I recap. Collect basis mean the normal interest, meaning there's no deduction of interest upfront. But for discount, yes, we're gonna deduct the interest upfront. Okay, so when we want to calculate the EIR, usually what we do, we're gonna calculate the interest first. Okay, we have to calculate the interest first. So the interest would be principal tadi P times R times T. Principal times the interest rates times the time ataupun the term. So the principal in this case is 3,000 ringgit. Okay, they borrow 3,000 ringgit. The rate is 12%. Okay, 12%. For how long? Remember, for this interest, the T here representing number of years. So if it's 1 year, you just put 1 lah. Kalau 2 years, you put 2. But what if kalau they borrow for 6 months, for example? They borrow 3,000 for 6 months. So you don't put 6 kat sini. If you put 6, it represents 6 years. So meaning whichever terms that is less than 1 year, okay, let's say 6 months tadi, you have to put 6 months to over with 12. Okay, remember 12 here? It will be 6 over 12 because this is only 6 months. So 6 over 12 is actually half a year. So that's why 6 divided by 12, you get 0.5 ataupun half. Okay, so you're going to put here 6 over 12 lah, kalau dia 6 months. Okay, never put 6 to represent 6 months. Sebab kalau you letak 6 kat sini, it actually represents 6 years. You multiply 6 times. Okay, so recap, whenever the terms is less than 1 year, whatever month, so you divide by 12. Okay, must be divided by 12. Okay, but in this case, it's 1 year, so it's 1 lah, ataupun it's 12 over 12. Okay, 12 over 12, 12 bagi 12. 1 lah kan? Right? So, how much is this one? 360 ke? 3,000. Okay, so 360 ringgit. Okay, so this is the interest that Mr. Lee has to pay. 360 ringgit. So this is the interest. So based on collect basis, the EIR would be interest, which is 360, divided by the proceeds, ataupun the principal in this case, they borrow 3,000 ringgit. There's no deduction because this is based on collect. So they're gonna receive 3,000 ringgit solid times 12. Okay, divide by T. So our case, the T is 12 months. Okay, 1 year tadi. So put 12 juga lah. So actually you don't have to calculate. This is actually 12%. Okay, so based on collect basis, your nominal rate, so remember the rate here, this is referring to nominal. Okay, without any adjustment. Okay, but based on collect basis, your nominal rate and your effective rate will be the same. Okay, there will be no difference between your nominal and effective rates. Okay, but if it's based on collect basis lah. But what if it's based on discount basis? The second option here. Okay, based on the same thing. Okay, it's the same terms and conditions except it is based on discount. Okay, so what happened? Your interest will be the same, 360. Okay, but your proceeds, okay, you cannot use 3,000 ringgit because you have to pay 360 upfront. Okay, you have to pay 360 upfront. Then you times 12 over 12 juga. So what happened here? 360 divided by 3,000 minus 360 times 12 over 12. So as you can see, the rate has increased to 13.6%. Okay, 13.6%. Ada soalan ni. Okay. So 13.6%. So as you can see here, by having these discount basis terms, it caused that the rate to increase from 12 to 13.6%. Okay, remember the interest rate sama, the principal is the same, the time is also the same, but because of the discount interest ni je, the actual interest that you have to pay is not 12% actually, it is actually 13.6%. Okay, 13.6%. Okay, so that's one thing based on discount interest. That's number one. So yeah, something like this. And remember, for bank loans, besides discount interest, we also have the capacity balance. Okay, the capacity balance. For capacity balance, as I said, this is a minimum deposits that the firms required to keep in the bank, and usually will be based on a percentage of the principal. And you need to keep this in the bank consistent with the terms that you borrow from the bank. Okay, just one thing for capacity balance. Let's say tadi, I bagi you example, if you borrow 10K and the CB requirement is 10%, for example. So technically, it's CB is 1,000 lah. Okay, 10% times 10,000 is 1,000 ringgit. So CB requirement is 1,000 based on this example. But let's say in the account, let's say you dah ada account dah with the same bank. Let's say you have in accounts 500 ringgit. Let's say. So to meet this CB requirement, okay, you just need to top up 500 ringgit je from your bank loans ni tadi. You borrow 10K, supposedly you need to deduct 1K as part of your CB requirement. But since you have 500 ringgit already in the account, so meaning you just need to pay half. Meaning your 10K will not be deducted with 1,000 ringgit, but instead you just need to deduct with 500 ringgit. Sekejap lagi kalau ada example, I will show you. Okay, just to make sure that the amount that you need to keep in the bank meet these amounts, the CB requirement amounts. So you can use your own money ataupun your previous balance in the bank as part of your CB requirements. So the same formula, okay, the same formula, but now your proceeds you have to deduct with the compensating balance amounts. So the rest is the same. Okay, to calculate the interest is the same, but the only difference would be your proceeds. Suppose you borrow 20,000 ringgit. So this is your principal, 20,000 ringgit at 14% interest. So this is your rates per annum. Paid at maturity. So paid at maturity meaning this is not this is not discount. This is based on collect basis. So meaning we don't deduct our interest upfront. So imagine we borrow for 1 year, right? And CB is 10%. Capacity balance 10%. What will be the effective rates? Okay, always starts with interest. Okay, always start with interest. So your interest is 20,000 ringgit principal. Rate is 14%. 14, and for 1 year. So you have 2,800 ringgit interest based on this. Your CB, capacity balance is 10%. So 20,000 times 10% is 2,000 ringgit. Okay, this is your CB. We don't need to minus interest as part of your proceeds. So for your proceeds, you borrow 20,000. Okay, but you need to minus the 2,000 CB requirement. So amount that you can use is only 18,000 ringgit. 18,000 ringgit. So therefore, to find the EIR, effective interest rate, it is interest 2,800 divide with proceeds 18,000 times 12, since this is 1 year, over 12. So 2,800 divided by 18,000. So it's about 15.6%. Okay. Again, if you compare with the nominal, this is nominal rate 14%, but since the bank imposed CB requirements, okay, the rate increased to 15.6%. So this is the real rate. Effective, remember, this is the real rate that you have to pay instead of the nominal 14%. So the real rate is actually 15.6%. Okay, this is based on CB requirements. Okay, CB requirements. Okay, so that's CBS. So earlier we have discount interest. Next, here we have CB requirements. And there's a possibility that the bank impose both, as I said. Okay, dia boleh dua-dua sekali. So if that's the case, borrow 25,000. Okay, so this is an example of both. Dia ada CB requirement 10%, and they have to pay interest prepaid ataupun in advance. Okay, ataupun upfront. So these are the terms that they use. Pay in advance, pay upfront, prepaid, ataupun they all are actually referring to discount interest. Okay, so what happened here? Okay, it's gonna affect the proceeds. Okay, so how to answer this question? Always start with interest. Okay, the interest is based on principal 25,000. This is our rate, 15%. Okay, imagine the time is 1 year juga. Okay, kalau dia kata 6 months, dia akan explicitly tulis 6 months, 9 months, whatever. But for this case, we assume it's 1 year. We have CB 10%. Okay, CB 10%. So interest would be principal 25,000. The rate is 15% for 1 year. Okay, so 25,000, 15%. So 3,750 would be the interest. Our CB requirement is 10%, so meaning 25,000 times 10% will be 2,500 ringgit. Okay, so this is the important part to calculate the proceed. Okay, the amount or the principal is 25,000. Okay, this is a discount interest, meaning you have to pay the interest upfront, meaning we have to minus the interest here, 3,750. That's number one. And secondly, we have CB requirement as well. So the capacity requirement is 10%. We already calculated, worth 2,500 ringgit. Okay, so we need to deduct both. This is the maximum that we have to deduct. So 25,000 minus 3,750 minus 2,500. So we left with only 18,750. So this is the proceeds. So once we have the proceeds, we can calculate the effective interest rates. So the interest is 3,750. The proceeds 18,750 times 12 over 12. So remember, this EIR is based on this formula. Jangan lupa, this is formula. Interest divided by proceeds times 12 over 12. Okay, but in order to solve this, I always prepare this part. I prepare this as a working in order to help us to calculate the EIR. So we have the interest, we have the CB requirement, and lastly, once we've discovered all the terms and conditions, we calculate the proceeds. Okay, so that when we have this information, kita dah boleh straight calculate EIR. So berapa ni? So 3,750 divided by 18,750 times 1. So the total will be 20%. Okay, 20%. 3,750 divided by 18,750 times 1 ataupun times 12 over 12. So from 15% nominal, when the bank imposed both discount interest and also CB requirement, the actual rate increased to 20%. Okay, so this is the real rate, 20%. Okay, something like this. Okay, questions, ada soalan tak? This is again based on the first option, which is bank loan. Okay, before we take a break, let's look at one example from our past year, December 2018. Let's look at the bank ataupun the short-term financing question. Okay, so this is from question number 3, December 2018. Question number 3, B. Okay, so this is a typical question for short-term financing. So they give you a scenario. So this case, dia kata Acacia Sdn Bhd, this is a company facing cash shortage of 400,000. So this is the amount that they need to borrow. So this is our principal, 400,000 ringgit. So as the financial manager, you are required to find possible financial assistance for a period of 6 months. So this is our time, 6 months. Okay, so there are 3 alternatives. Okay, so since we are just discussing the bank loans just now, so out of these 3 alternatives, the one that we've covered so far is just this one, alternative 3. A discounted loan, so they use the word discounted here, so meaning we know that the interest needs to be paid upfront. Okay, discounted loan, 12% interest, so this is our rate. And the CB requirement, 20%. So 20% is your CB. Okay, based on the face value, so meaning based on your borrowed amount. So how much? 400,000. So they borrow 400,000. So 20% of it needs to be kept in the bank as part of your CB requirements. And one last statement here, they said that this company, Acacia Sdn Bhd, currently maintains a demand deposit of 50,000 ringgit. So this is already in the account. Okay, I'll show you what will be the implication for our CB. Okay, sebab CB requirement is 20%. So you need to calculate dulu berapa 20% of 400. So you can see already lah, 20% of 400 is about 80,000 ringgit. So 80,000 needs to be kept in the bank. But in the account, they already have 50K. So meaning we don't have to deduct 80,000 from this 400,000. So just a portion of it to make sure that the 80,000 will be kept in the bank. So let's use. Okay. Okay, so this is from December 2018, question 3B. Right, so we have to start with alternative 3. Okay, so because 1 and 2 we haven't discussed yet. So for alternative 3, okay, so you have all of the information. So how to answer or how to find the effective interest rate? I always start with interest. Okay, so the interest is based on principal of 400,000. Okay, because this is the amount that they need to borrow, 400,000. The rate is 12%, based on alternative 3 is 12%. And for how long? For 6 months. So 6/12. Okay, the ones in the notes, kita guna tadi always 1 year tadi kan, but here it's for 6 months. So I put here 6/12. So 400,000 times 12%, 6/12. So it's 24,000 ringgit. Okay, 24,000 ringgit is the amount of interest. We have CB requirement tadi, 400,000 times 20%. Remember for CB requirement, kita tak multiply dengan time because they multiply directly with the percentage of CB requirement. So dalam case ni is 20%. So it's 80,000 tadi kan. Okay, 400,000 times 20% is 80,000 ringgit. But if you recall, in the question, they specify that the company currently maintains 50,000 ringgit in the account already. So what does it mean? Remember, kalau they don't have this 50K in the account, this 80,000 needs to be deducted from our proceeds, from the 400,000 that the company borrow. 80,000 needs to be kept in the bank account. So from 400 minus 80K, then baru kita dapat the proceeds. Itu tak tolak dengan discount interest lagi. Okay, but in this case, okay, the company dah ada dah 50K in the bank accounts. So meaning, they just need to top up another 30K je sebenarnya. So what's the implication? So instead of deducting 80K solids, okay, this company needs to deduct only 30K from the proceeds. Okay, I'm going to show you here in the proceed what will be the implication. You boleh je show kat sini ataupun you can use something like this lah. So you borrow 400K. Okay. Then you have to pay interest upfront because this is a discounted loan. So the 24K you have to minus as part of your discount interest. And usually we're gonna deduct CB kat belakang kan, macam example tadi. But in this case, you don't have to deduct 80K solid. Okay, you have to pay 30K je sebenarnya kan. Sebab 80K dah is requirement, 50K is in the accounts. Okay, so mathematically, you can put like this, put a bracket. You should pay 80K tadi as part of your CB, but you have 50K in the account. So the ones in the bracket is actually 30,000. Okay, tapi jangan tak letak bracket ni. Kalau you tak letak bracket ni, you letak macam 400, tolak 24, tolak 80, tolak 50. No. Okay, the ones in the bracket actually represents 30,000 ringgit. Okay, so kalau you tak nak confuse, you boleh tolak kat sini siap-siap lah. 80,000 minus 50,000. Okay, because this is in the account, so you need to deduct 30,000 je. Okay, so mathematically you can use a bracket here to represent the 30,000, or else kalau you takut you confuse, you tolak siap-siap 50K as your in account punya balance. So the CB yang you kena deduct is only 30,000 ringgit. So berapa ni? 400,000 borrowed minus 24,000 minus 30,000. So 346,000. Okay, so this is your proceeds. So you borrow 400,000, but you can utilize only 346,000 only. So what's the implication? It will be our EIR. Okay, our EIR always be higher. Tak mungkin dia lagi rendah daripada nominal. Okay, so meaning from your 12% ni tadi, obviously based on these two requirement, it will increase. So your interest is 24,000. Your proceeds 346,000. Borrow for 12 months. Times 12 months, but you borrow for 6 months. Okay, so C kat sini is 6. Okay, ni satu lagi Don't get confused between this EIR formula dengan this. Okay, this is terms for interest. Always divide by 12 kalau dia less than 1 year. But here the formula tadi kalau you perasan is 12 divided by T. So that's why the T is always at the bottom. Jangan confuse asal ni 6/12 ni 12/6. Okay, so this is two different things. This is for interest calculation. This is based on EIR. Right, so 24,000 divided by 346,000 times 12, 6. So here you can see it's 13.87%. Okay, 13.87%. Okay, so this would be our effective interest rate for alternative 3. Okay, for Acacia, based on alternative 3, the cost would be 13.87%. Okay, 13.87%. Okay, any question? Ada soalan ke?
Sir,
Ya.
let's say saya ambil 13.9%, salah ke?
Salah.
Ya, 13.87, right?
Aha.
Let's say kalau saya bundakan 13.9%.
Boleh?
Boleh.
Tapi jangan gunakan tu 14%. Just keep at least one decimal. At least. One decimal.
Alright,
One
thank you,
decimal.
sir.
Sebab nanti kalau you bundakan tu around number, let's say 14, so bila you nak buat comparison with other alternative, takut ada some other rates yang bila you round up dapat 14% juga. So it's not easy to compare. So at least keep one decimal. Normally they use 2 decimal. So 1 decimal tu sebenarnya acceptable jugalah.
Okay, sir. Thank
Okay.
you.
Alright. So I think before we proceed with the other two, so far we've done the trade credit, and now kita baru habis the bank loans, the notes payable. So we have two more. We have revolving credit, and we also have commercial paper. But before we proceed with these two, let's take a short break before we proceed with the two I said earlier. Okay, we take 5 lah sampai 9:45, nanti kita restart balik. Okay. Okay, ada soalan tadi why 12/6? Sebab formula dia memang 12/T ni The formula is this one, 12/T. So bila 6 months, so T into 6 is 12/6. Okay, unlike our formula interest tadi. Tak cakap. Okay. Mesti dengar Unlike our ni mana tadi ni. Unlike our interest ni tadi, so the formula is based on we have to mana yang first saya tulis tadi. Oh, 12 yang kat sini. Right. So kalau interest tu, we have to divide by 12 kalau dia less than 1 year. Let's say 6 months tadi kan, so that's why I put 6/12. That's for interest for this part, T ni. But when we use this term dalam EIR, the T yang bawah ni pula, they always at the bottom. Okay, 12/T. So that's why kita bagi 6 tadi, 12/6 kat sini. Okay. Kita tengok example yang lain. Okay, so let's proceed with the other two. Sekejap, More or less the same, I can say more or less the same, tapi ada slight variation to it. Okay, ada slight variation sebab ada terms and condition yang applicable only for that particular instrument saja. Okay, I dah unmute kan. Okay, sorry. So for RCA, Revolving Credit Agreement, as I said, this is a type of loan still with a bank. Okay, cuma kalau tadi notes payable is you borrow 400,000 tadi. Okay, after tolak all the terms and conditions, tolak the interest, tolak the discounted interest, and also the CB, then we left with 300 something. Okay, one off. But for this revolving credit agreement, okay, you are given a credit line. So meaning kalau lah you dapat 400,000, you can use 400,000 ni sepanjang tahun. Okay, so you maknanya you boleh guna sikit-sikit lah. This month you guna 10k, next month you guna another 50k and so on. And for the whole year tu you boleh guna up to 400,000 contohnya. Okay, so you have to pay interest on the amount that they use. Okay, let's say again kalau 400,000 given to you, the amount that you use you have to pay interest. The amount that you unused you have to pay the commitment fees. Okay, so there are two parts. You guna you have to pay interest. You tak guna you have to pay commitment fees. So both ways you have to pay. Okay, but usually the commitment fees is much cheaper lah as compared to interest rates. Right? So this is the variation. Generally, the look is still the same. Okay, cuma we have interest, but we have to plus with the commitment fee. So this commitment fee we have to add with the interest. So interest formula yang sama. Okay, the same formula, PRT. But we have to add with the commitment fee. So commitment fee, remember, this is based on unused. Based on unused only. Okay, so kalau the commitment fee is 1%, for example. So 1% on the unused amount. Okay, not the principal, based on unused. So kalau interest ni based on the use. So the principal is based on the use amount. So the unused, we use the commitment fees. Okay, and generally the usable fund this is actually our proceed lah. Okay, it's the same thing. So proceed is amount that you borrow minus if you have CB requirement, kalau ada. Okay, kalau ada CB requirement, similarly we gonna minus in our proceed. Okay, so multiply with 12 over T, so sama. This is the same as before. Okay, for example, like this, Binaran Corporation has a revolving credit agreement with a bank, so it can borrow up to 2 million ringgit. Okay, so this is amount that they can borrow. Okay, but this is not the amount that they use. They just amount that can borrow up to 2 million with a 12% interest. So this is our rate of interest, 12%. And they also have 10% CB. Okay, on any funds borrowed. And the commitment fee is 0.5%. So this is the commitment fee, CF. Okay, and remember the commitment fee is always based on unused only. Okay, so what would be the EIR, effective interest rates, if the company utilized 800,000? So this is the amount dipinjam, 800,000. So 2 million ni it's not principal. This is amount yang you boleh pakai. Okay, the line worth 2 million. But this company only utilizes 800 million, which is this would be the principal. So the principal is not 2 million, the principal is 800,000. Okay, remember, principal is based on amount used atau amount borrowed only. Okay, this is the maximum. Meaning what happened? Out of these 2 million, 800,000 is the used amount. So use 800,000. So the unused will be the difference. Okay, so 2 million dipakai 800 je. So there's 1.2 million. This is the unused portion, 1.2 million. So what dipakai only 800,000. So for this will be the principal. This will be based on the commitment fees. Okay, so meaning in terms of the interest would be 800,000 with 12% interest. Okay, so again, this example, we're going to assume entire year, so meaning going to assume 1 year. So 800,000 times 12%, 96. Okay, 96,000. So the interest is 96,000. Ada soalan ke? Okay, so that's interest based on used amount. This question also have CB. CB dia berapa tadi? CB dia 10%. Okay, and this 10% again is not based on the whole amount. It's based on amounts borrowed. Amount borrowed. So the amount borrowed is 800,000. Okay, 800,000 times 10%, 0.1. So meaning 80,000 ringgit. Okay, 80,000 ringgit is the compensating balance. Okay, and we have additional commitment fees. So commitment fees is 0.5%. And this 0.5% kita kena charge based on 1.2 million. Okay, so 1.2 million ni kita kena charge 0.5%. So 6,000 ringgit. Okay, 6,000 ringgit is the commitment fees. Okay, this is the commitment fees. Okay, so obviously akan ada proceed lah kejap lagi. So the proceed would be borrow 800,000 minus CB 80,000. So 730,000 would be the proceed. So remember, proceed ni hanya minus CB and not the commitment fees. Commitment fees will be part of your charges together with interest. Okay, in your numerator. Okay, dalam formula tu, you'll be numerator interest plus commitment fees. Yang CB will be deducted as part of your proceeds. Okay, so we have interest tadi. Berapa? 96,000. We have the commitment fees, 6,000 ringgit. Yang ni, 6,000 ringgit. And we divide with proceeds. Our proceed just now is 720.
Tak nampak calculation.
Okay, so your EIR would be interest of 96,000.
Excuse me, sir.
Ada pertanyaan ke? Ada tak nampak calculation yang mana?
Baru je nampak the calculation.
Baru nampak. Yang ni nampak?
Ya, baru nampak. Tadi tak ada.
Okay, so the EIR interest is 96,000. Okay, divide by our proceed 720 times 12 over 12. Okay, so the interest is 13.33%. Okay, 13.33%. Okay, so this is how we calculate based on revolving credit agreement. Okay, based on revolving credit agreement. So you're going to see two values. Number one is the total amount ataupun the total line of credit given to you. But always the question will give you one smaller values that will be used. Okay, out of this total value, akan ada satu portion dia akan guna. And the unused portion, you need to calculate the commitment fees. Okay, always macam tu. Right? And once we have this, cari CB juga, and then deduct from your proceeds. Then you can calculate the EIR as normal. Oh, I think I salah kira ni. I terlupa nak tambah commitment fee. Commitment fee tadi berapa? 6,000. Okay, bear with me. I terlupa nak tambah. So it's supposed to be 96,000. Okay, 96,000 plus 6,000. Okay, divide by 720. Okay, it's supposed to be 14.17. Salah, sorry. It's 14.17%. Okay, it's interest plus commitment fee. Ini interest plus commitment fee divide by proceeds. Okay, divide by proceed 720. So ni 14.1 I dapat 17 atau 16 kurang lah 167. Okay, so 96 plus 6,000 divide by 720. Okay, so let's look at the past year tadi. Okay, so for this question 3B just now, revolving credit would be for alternative one. Okay, so kita proceed dengan alternative one pula. Right, so ni alternative one, obtain a line of credit of 500,000. So the bank give us 500,000 line of credit. But remember, amount borrowed is just 400 So that's why for line of credit memang always they give you higher values. Okay, reason being satu je. They want you to calculate the commitment fees. Okay, so this commitment fee is based on unused. So kalau dia bagi 500k and we use 400, so meaning the unused would be 100,000 for this question because the line of credit is 500 and we're going to use only 400,000 cash shortage. So there will be unused portion of 100,000 here. Okay, so 2% on the unused, which is in this case kita dah determine 100,000 and we have 8% risk 8% interest. So this is our R. And dia ada CB 80,000. So CB tak payah calculate lah sebab dia bagi a value of 80,000. Okay. So therefore, for alternative one, the interest would be, okay, remember the interest must be based on the principal, not the value of 500s. But remember, this 500 consists of 400,000 principal and 100,000 the unused portion. Okay, and the interest kita guna the principal. So 400,000 times 8%. And this is for 6 months. So it's 16,000 ringgit. Okay. I think I tak boleh share macam tu lah I'm going to share with you the whole screen. Kena turun kejap Give me 1 second. Okay, sorry. Now, so our interest will be 16,000. Nampak ni? And we have commitment fees. Okay, and the commitment fees is based on the unused. So unused is 100,000. And the rate of unused will be 2%. Okay, 0.02. So we have 2,000 ringgit. Okay, 2,000 ringgit. So therefore our proceeds would be 400,000 borrowed. And we have CB requirement of 80,000. So 320,000. Okay, and that's about it. Then we can calculate the effective interest rates. So the EIR will be interest 16,000. Okay, plus commitment fee 2,000 ringgit. Divide by proceed 320,000. Multiply by 12 and divide by 6. Okay, why 6 again? Macam tadi lah, because this divide by T, 12 divided by T. So T dia is 6 months. So 18 divided by 320. So here we have 11.25%. Okay, so for alternative 1, based on this, okay, interest 16,000, the commitment fees is 2,000 ringgit, and the proceeds 320,000. So the ER equivalent to 11.25%. Okay, 11.25%. Okay, so this is based on alternative 1. So we have alternative 1 so far and alternative 3. So we left with alternative 2, which is based on commercial paper, and this would be our final option. Okay, final alternative. But before we tengok commercial paper, ada question so far? For the, this is for RCA, Revolving Credit. Okay, so just beware of the commitment fees. Okay, first of all, you need to differentiate which will be the used portion and which will be the unused portion. Okay, untuk commercial, untuk revolving credit, always akan ada portion yang jadi unused. Okay, so don't use the whole amount as your interest, as your principal. Maknanya 500,000 ni jangan gunakan semuanya untuk your principal, because it's not fair anyway kalau nak compare. Yang lain semua 400,000 tapi for alternative 1 you guna 500,000. Okay, tak boleh. To make it fair, when you make comparison, you still use 400,000 as principal. So the balance too will be your unused portion. Okay, so the unused portion is for the commitment fees. Okay, for the commitment fees. And then follow the formula, interest plus commitment fees divided by proceeds. Then dapatlah the EIR for RCA. Now, the final one, okay, the final alternative is commercial paper. Okay, so commercial paper is short-term unsecured promissory note, as I said tadi, and usually sold by large companies. And one of the key features of commercial paper is always on discount basis. Always. So what does it mean by discount basis? Meaning from your proceeds, remember, you akan always ambil principal yang you pinjam minus interest. Okay, because it's always on discount basis. Okay, and for this part, as you recall tadi kalau cerita, you ingat, the commercial paper is derived ataupun the fund derived from investor. Okay, it come from investor. But walaupun kita tak pinjam dengan bank in this case, most of the time we're gonna use bank as our agent ataupun as our broker. So therefore, even though we don't borrow from the bank directly, okay, the bank here becomes the intermediaries, and therefore we still needs to pay the bank as well. Okay, so In this case, we have what we call as issuance cost. Kita kena bayar some brokerage fee to the broker lah, ataupun to the bank. So that's why dalam proceeds you have to minus juga the issuance cost, KIC. Ataupun sometimes we use the term brokerage fee, BF. Okay, so why companies like to use commercial paper? Number one, usually the rates is cheaper than the bank. Okay, the bank loans too. Selalunya, for these commercial paper, usually will be cheaper as compared to the bank loans, number one. Okay, so number two, you don't have to keep CB requirement. Okay, CB ni selalu kalau dengan bank, sometimes they ask you to keep conversion balance, but for this transaction, there will be no CB. Okay, and this is widely recognized and used by most credit-worthy companies. So big companies, big corporation can use commercial paper. So in terms of the formula, okay, nampak macam lain sikit kan, they use days kat sini, alright. Then they have this part. Okay, kalau you perasan apa yang I tulis ni, face value minus interest minus issuing cost, ni principal minus interest minus issuing cost, this is proceed. So technically, this is proceed. Salah hijau ni, proceed. Okay, so the whole thing here referring to proceeds. Okay, so interest divided by proceeds. So technically it's the same formula as our first notes payable punya formula. Okay, without any commitment fees lah. Okay, so interest divided by proceed, but this proceed is consistent of this. Mesti ada tiga-tiga ni. Unlike our bank loans earlier, whether to tolak interest is based on discount and to tolak CB if there's any CB. Okay, kalau tak ada salah satu, then you tak perlu tolak. Tapi for commercial paper, it's always these three. Face value minus interest minus issuing cost. Times 360 ataupun again, you boleh guna 12 juga sebenarnya. Divide by T. Maturity dia berapa lama. Alright. Okay, so Motorola Corporation plans to issue commercial paper worth 30 million ringgit. The firm never used commercial paper before, so they use dealer, okay, ataupun broker. They have 270 days maturity. Require 11% per annum, so this is the rates of interest. The firm have to pay fees totaling 200,000, so this is the issuing cost, 200,000. So therefore, this is the principal lah, 30 million. So what would be the effective cost of the commercial paper to Motorola? Okay, so I'm going to start from top lah, takut tak muat kat bawah ni. So the interest is 30 million. The rate of interest is 11%. And for 270 days over 360. Since they use days kat sini, so I use days juga lah as part of I punya T kat sini. So 30 million, 11% times 270 divided by 360. Okay, so it's 2.475 million. Okay, that's my interest, 2.475 million. All right. The rest is straightforward. Okay, maknanya I can calculate my proceed kat sini. I borrow 30 million. I have to pay interest 2.475 million. And I have to pay 200,000 issuing costs. $100,000. So here it's 27 million. 325. Okay, that's my proceeds. So once you have this, you can calculate your EIR. Okay, 2.475 million divided by 27.325 million times 360 divided by 270. So here we have 12.08 cents. Okay, so higher than 11%, obviously. So the effective interest rate for this transaction is 12.08%. All right. So untuk soalan ni is quite straightforward because the commitment fees, not commitment fees, the issuance cost is given direct ataupun one solid number, 200,000. Okay, for some question you have to calculate manually. Okay, I'm not sure whether our question looks like that. Okay, something like this lah. So let's look at the question here. So untuk commercial paper, it's alternative 2. Okay, so issue commercial paper with a face value. Okay, so they give you the word face value here. Face value meaning for one piece of commercial paper, it's value at 100,000. Itu masuk dia face value of 100,000. So this 100,000 means for one piece of commercial paper, it worth 100,000. And remember, this company needs 400,000. Okay. And we have interest, the interest is 6%. So this is our R. And we have issuing costs. Okay, cost of issuing this paper, 5,000 ringgit. Each paper, ataupun per paper is 5,000 ringgit. Okay, there's no CB. Memang tak ada CB pun kan. And there's nothing else lah, itu je. No other information. So, again, to calculate this, I'm going to use interest first. And it's for principal dia, kita guna 400,000 juga. Okay, with the rate of interest of 6%. For how long? For 6 months. So 6/12. So the interest is 12,000 ringgit. Okay, 12,000 ringgit. And we have the issuing cost. Okay, untuk soalan ni, the issuing cost dia is not given directly ataupun it's not given as a total values. They just give you one information. It's 5,000 for each paper. Okay, so meaning it's not it's not 5,000 je lah, because we know one paper equivalent to 100,000. Okay, but we don't want 100,000, we need 400,000. Okay, so to know how many papers they need to issue, so what we always use is actually take the principal, 400,000, divide by one paper equivalent to the face value. Okay, the face value is 100,000. So 400,000 divided by 100,000, we know the company needs 4 papers. Betul tak? If one paper is 100,000, so how many papers we need to sell in order to get 400,000? So technically it's 4 papers. Okay, baru kita dapat 400,000. So to get that 4 papers, we just use this simple formula. Okay, the principal divided by the face value. So 400,000 divided by 100,000, this is 4 papers. Then we multiply with 5,000 ringgit, because it's 5,000 ringgit one paper. So 4 papers times 5,000, it's 20,000 ringgit. Okay, so this is the issuing cost. Okay, I recap. This one, the one in the bracket, is actually to find how many papers to be issued. So this is the principal, and this is the face value of the commercial paper. So when you divide 400 with 100,000, you get 4 papers. Okay, so meaning this company needs to issue 4 papers in order to get 400,000. So 4 papers times 5,000 each is equivalent to 200,000. 4 times 5, 20,000. Okay, 20,000 ringgit. So the proceed would be 400,000 minus the discount interest, 12,000, minus the issuing cost, 20,000. So 400 minus 12,000 minus 20,000. So we have 368,000. So the EIR would be interest of 12,000, principal of 368,000, 12 over 6. So it's 6.52%. Okay, 6.52%. Right in here, alternative 2. So technically our 3B1, okay, calculate the effective interest rate for each alternative, 9 marks kita dah buat, all three. So if you see 9 marks, so meaning setiap satu tu 3 marks lah. Okay, from alternative 3, we started with alternative 3 earlier, and then alternative 1, okay, and then alternative 2. So we have 13.87, 11.25, and also 6.52. Okay, for the respective effective interest rates. Okay, so for the question 3B2, justify the best alternatives for Acacia. Okay, so for question number 2, the best alternative. So to choose the best, always choose the cheapest ataupun the lowest. So in our case, it's actually alternative 2, meaning to issue commercial paper. So meaning, if you want to suggest, okay, you can see kat sini the best. Is alternative 2 ataupun dalam bracket commercial paper. Because it offers the lowest rate. Okay, so there are two elements here. Number 1, your selection, and number 2, the justification. Okay, the best alternative is alternative apa? Alternative 2 ke 3 ke, tapi dalam case ni the cheapest is alternative 2 lah. 6.52 tadi kan. So you put here alternative number 2, which is commercial paper, because why? It offers the lowest rates. So the lowest rate ni memang justification dia ni je lah. Always because it's lowest rate. Okay, when you compare among the options available, always go for the lowest. Okay, 13.8, 11.25, 6.52. So obviously alternative 2 is the lowest rate. Okay, so that's how we justify lah, the best alternative. Okay, so with that, kita dapatlah 10 marks untuk soalan ni. Right, so any question? Dah habis kot . So besides the unsecured tadi, we also have secured. As I said, the secured is based on loans with collateral. You need to pledge some assets. So from lender's point of view, okay, obviously as a lender, dia akan prefer yang ada collateral lah because it's more secured. Okay, tapi akan ada some cost juga lah sebab bila letak collateral. Tapi apa, in terms of easier to get financing, obviously from borrower's point of view, it's much easier to get the loans approved lah because you have assets. Okay, tapi kita tak akan go through lah account receivable financing, inventory financing ni kita tak akan go through. Okay. Apa je lah. Okay, so with that, that's the end of topic number 8. Okay, short-term financing. Ada soalan? Okay, so we have a couple of minutes ni, just nak inform ataupun just nak remind, don't forget your individual assignment due tonight at 10. So check your My Guru kalau masih tak tengok lagi by now. You have until 10 tonight. Okay, that's number one. There's another assessment not going yet lah, tapi coming your way. It will be quiz. I dah cakap kot sebelum ni. Online quiz. Again, still revolve around topic 5, 6 dan 7. Cuma that's about theory. Okay. So nanti check dalam My Guru, I will inform. There will be online quiz multiple choice. Okay. Untuk kalau assignment sebelum ni topic 5, 6, 7, you use calculation and ada satu soalan teori kat bawah tu. But next one, there will be online quiz. I tak ingat. I think about 20 questions. It's either 10 or 20. Nanti I check balik. Online multiple choice. And we're gonna use U-Future punya juga. Okay, we use U-Future. Cuma I will give you long time untuk menjawab. Okay, tempoh untuk menjawab tu, let's say I give you 1 week katakanlah. I give you 1 week. Tapi once you are in the answering question mode, you will be given like 10 minutes ataupun 20 minutes, tak ingat. Nanti I beritahu lah. So maknanya walaupun I bagi you masa seminggu, tempoh katakanlah from Monday until Sunday next week katakan. But once you try atau attempt to answer, you'll be given let's say 10 minutes to answer. So quiz tu akan last 10 or to 15 minutes macam tu. And you kena habiskan dalam tempoh tu je lah. Okay, and 1 attempt only. So please cari masa yang you memang betul-betul free and cari kawasan ataupun tempat yang masa tu memang line stable lah untuk you future. And try don't do it during the weekend. Macam hari ni kan, mesti jam sikit lah. Okay, so try to, tak kira lah, you can do it evening, malam kalau you nak. Okay, but as you all know, you future ni after 12 dia akan tutup so don't do at midnight lah. So before that, maybe around 8 ke 9 ke, you can try. So do it just 10-15 minutes je. Nanti check kat dalam tu dia akan mention lah how many minutes given to you. So you kena siapkan, pilih jawapan you for 10-20 question tak ingat. Nanti I'll let you know. And you have to settle within that period lah. And then the marks will be given automatically after that. Okay, so itu salah satu assessment untuk individual assessment juga. Okay, is part of, ada satu part, berapa persen markah tak ingat, 5% kot. Okay, I check. Nampak kat sini, I think it's about 5 to 10% of your mark kat situ. Okay, so wait for my announcement, nanti dah ada. I will post obviously announcement dalam My Guru, tapi I will let you know sebab benda ni online. I will let you know dalam group juga. Okay, for the question. Okay, so I think that's about it for today. Ada soalan ke kat chat ni? Okay, so thank you very much. As always, once the video available, I akan upload and share with you dalam U-Future tu the link. So thank you, and don't forget 2 things the individual assignment you tonight, and secondly nanti I think about next week ataupun the following week before our next meeting lah, I akan bagi you the online quiz tu. Okay, melalui U-Future. Alright, thank you, and I'll see you guys in the next session. Alright, Assalamualaikum.
Salam. Thank you, sir.
Thank you, sir.
Thank you, sir.
Salam.
Thank you, sir.
Okay, welcome.